So rather than, I'll say, jump into the mandatory firm rotation, we thought an approach of doing a comprehensive, and we call this a comprehensive review of the audit firm and the whole audit process every 5 years was an alternative. And that, what we did is we actually developed a whole series of materials which provides tools to the audit committee to do that evaluation. Now in Canada, we've had that for a couple of years now, and a number of major organizations have gone through that. Some have led to them actually going to tender, some have not. That's always a question in their mind, that should they or shouldn't they. I don't think it should be adversarial, okay? I think it should be, you know, how do you build this together? How do you work together? I mean, there's certain things that we can certainly add from a regulatory environment and tools to give to the audit committee to make their job a little bit easier.
Well, I'm opposed to MAFR simply for the reason because the intervention as regulated is something which happens at the stroke of midnight, let's say, and there's no transition period. There's huge institutional memory which is just gone, and at a great cost, because the executives have to spend time teaching the new auditor about the business of the company, and there might well be parts of the business in different jurisdictions. There might be a whole group of wholly owned subsidiaries in different jurisdictions. In an ideal world, I accept that an auditor needs to be regulated and not be a self-regulatory body, because an auditor performs a public interest function, and therefore you should have a public interest oversight. But that's regulating the profession and giving it standards of auditing, international standards of auditing, but not to intervene into the company's existence.
If we have concerns about the audit process, we will ask those questions of the chair of the audit committees, how they are assessing the quality of the team, the quality of management. We do expect rotation of audit partner and certain rotation of the team in an orderly fashion, so that the team does retain that corporate memory, and also bringing in some fresh blood so that the team sort of doesn't become lazy, if you want, about the audits, where they might get to the stage where they miss issues. I think there is a role for regulators, but you can't regulate for competence. And if this is about competence, it has to come from the audit committee.
In terms of deadlines, I think it's the regulator has to tell you, listen, at the very least you have to change auditors every X years, which is already the case, right, for listed companies again and financial institutions. Having said that, I think that for other companies that are not listed, or even the timing of the change of auditors, I think then the audit committee has to be the one to step in and say when they should do it, because if you're not a listed company or a financial company, you don't have you don't need to change auditors ever. So if the audit committee doesn't tell you that you have to do it, then you wouldn't do it, right? So at the same time, in the other cases where you do have to change them, might be better at certain points in time. It might be the audit committee might decide that the auditor is not doing the best job that they could. The audit committee might be shopping around and finding the same services for a better price. So ultimately, the audit committee should be the one to say, listen, we need to look into this and maybe change the auditor.
In terms of deciding on the timing, it really came down to us, quite frankly, looking at ourselves in the mirror and saying, do we really believe that we have canvassed all the alternatives available to us as the Royal Bank of Canada and are making a recommendation in the best interest of shareholders and and the company to reappoint the incumbent auditors, and we just said we can't pass that test because we hadn't. In a rapidly changing banking environment, in a rapidly changing audit profession environment, really assessed all the alternatives that were available to us. So we, that was what prompted us. It wasn't some external timetable or some external event that did it. It was just more our own conviction about our responsibilities.